So in this video, I'm just going to be breaking down today's trade on May 6, 2025 and just what I saw and why I took this setup. So the first thing I saw the 3 MAs are above price, right? We got the 13 MA, the 50 MA, and the 200 MA. They're all above price, indicating that momentum is pushing downwards. Next thing I saw price pushing down, come up, push down, broke this structure right here, right? Because this candle broke this last low, indicating that price is in a downtrend, right? Here on this, when we zoom in, I saw price push down, come up, and push down even lower, breaking this last low, breaking structure, and breaking this bigger last low, breaking structure again, creating this supply zone. And this aggressive candle that pushed down created a gap right here. So that gap is basically a fair value gap, which is unfilled orders, and price will most likely come back up to fill in those orders and reject off our supply zone to then continue the trend, continue the downtrend. So we just waited for price to come back and fill in the gap. Boom. So right here, price came back up, filled in the gap, and touched our zone and rejected off our zone. Boom. So now the next candle that breaks the recent candle low, I'm looking to get in for sales on NASDAQ. Bam. This candle came up and it broke the low. Here I was already in the trade. I was in profit, and then price started coming back up and I was in drawdown. My stop loss was originally up here. Boom. So my 1-to-1 is like here. Yeah, that's like my 1-to-1 area. And then my 2-to-1 area was like here. Okay. So here I was in the trade. Just kept holding. Price did its thing. Boom. And it hit my 1-to-1. So it hit my 1-to-1, but my goal was 2-to-1. So I just stayed holding. At this point, I had moved my stop loss to break even, right? Making it a risk-free trade. Now, if price comes back up and I lose, I don't lose no money. I saw this candle come in, and I was like, okay, I'm probably gonna move my stop loss back over here, but not to the original stop loss level. But I'm gonna risk a little bit less, but I'm gonna put it to this recent high, right? Because if price comes back up and breaks this last high, that indicates that price is breaking structure and it's a shift in trend. So now price is not downtrending, now price is uptrending. And if price is still on a downtrend, then price should not be breaking this high. You know, it should not be breaking structure to the upside. So I stayed holding. Price came to my break even, and then I saw this candle and it began to reject. So I'm like, okay, price did not break this high, and now price is rejecting of my break even. Also, price created a new low, right? Because now it's a low, a lower low, and now it's a lower low because price broke this structure right here, broke this wick. So now there's a lower low, still indicating that price is in a downtrend, right? So I was just waiting. Boom. Here I saw this candle and it broke that last candle low, right? That was rejecting off our zone. So I got in again. Now I have two positions in this trade. And here price started dropping. Boom. So here I was like, okay, I saw this candle and I'm like, you know what? I have two positions in this trade. Price, it looks like it could reach my 2-to-1 right down here. But since I have two positions in, the same amount of money that I'm in right now, that I'm in profit right now, is the same amount of money that will be up in profit at my 2-to-1 with one trade. So I'm like, okay, I'm basically up my 2-to-1 right now. So why not just close out, call it a day. I saw price rejecting. I didn't want to risk it like that. So I'm like, you know what? I'm just going to close out and call it a day. And that's what I did. I just closed out, call it a day, secured $430. The goal was $600 to $800 for the day. But you know, 400 is pretty valid. And then after that, 9:30 candle was gonna open. which 9:30 is the New York Stock Exchange open, and that's when Wall Street opens and the market is very volatile and price moves rapidly up or down. And it's beneficial if you're in the right side of price and price is going in your favor, you can make a lot of money. But if price is going against you, it's no bueno, right? So I decided, I was like, you know what, 9:30 is coming in. I'm already up my 2 to 1 on this one trade because I entered twice and I kept holding. So might as well just close out, call it a day. We come back tomorrow and we'll see what happens, you know. And then price is this, boom, boom. The 9:30 candle open, bam, and you see your 2 to 1 would have got hit. So I would have made my $600 to $800 if I would have kept holding. But it was better to secure because you never know what could happen, right? And price looked like it was rejecting of this support right here because price came down, bounce, down, bounce, down, and right here started bouncing with this green candle. So I was like, you know what? It might continue back up. So let me just get out. So that was a good call. Market is not about predicting, but it's about reacting to the market and reacting to what you see in price. Okay. That candle came in, price started pushing up, doing its thing. I was already out the trade, and from there, price is history. You know what I mean? Price kept dropping. Everything's good. So whoever kept holding probably got stopped out right here by this 9:30 when it came back up. But if you got back in and everything was valid, you would have made your money back. And yeah, and that was today's trade breakdown. And so far we're 2-0 for the week, 2 wins, 0 losses. We're in a winning streak, and we'll see what tomorrow has to offer.